Hello, good afternoon. The Fed will rise interest rates on Wednesday, and that is almost certain. Today we will look at the consequences of such a move on various markets. We'll first start with the euro-dollar, and we'll look at it through the different time frames we have on the FinGraphs platform. So first, with the long-term view, with euro-dollar on a weekly chart, or the perspective over the next few quarters. What we could see is that euro-dollar is theoretically still in a downtrend. Our trend indicator is still heading lower, and its targets have been pretty much reached. So we would call this an exhausted downtrend. We could also see that our risk index was oversold towards the end of last year, which is starting into a reversal mode. So basically an exhausted downtrend, which we cannot confirm has turned yet. Now, if we move on to the daily chart or the perspective over the next few months, we are now clearly in an uptrend. This uptrend has reached a short-term intermediate top. As you can see, both our envelopes are touching each other, and the risk index has been in the red since the end of May. That said, this move up doesn't seem quite over yet. We could see it extend over the next few weeks, possibly towards end June, early July, if you look at where our target range is, and it could lead us up to above 114. Now, looking at the hourly chart, well, we could see we are in an intermediate correction in this move up. This correction down probably has another week to go and could, in worst cases, move down to our corrective targets towards the lower 111, higher 110s. If it were to make it below 110.49 or 110.50, that could probably mean that a more significant reversal is underway. But at the moment, we see it consolidating down for another week or so and possibly into our corrective target range. So in general, it's an exhausted downtrend over the long term on the weekly chart. It's an impulsive uptrend on the daily chart, which seems to have a few more weeks to go and some more potential, although it is already getting overbought. And finally, the hourly is in an intermediate correction down or consolidation, which could last a bit longer but should resume its uptrend towards the end of June. Now let's look at dollar-yen. Dollar-yen is basically a good proxy for risk-on, risk-off considerations. As you can see, the dollar was quite strong versus the yen in the second half of 2016. And showing a risk-on situation and also marrying the reflation trades. Since the reflation trades have started to correct in December, we can see it is in a consolidation down. At the moment, we can see that our envelopes are pretty much neutral, so the smaller envelope is in the middle of the longer-term envelope. The longer-term envelope is still slightly up, hence the bull signal here, but we consider this quite a neutral situation. And as you can see, we have no targets calculated on the side. Also, the risk index is still pretty much in the middle of the range. So it is still considered as an uptrend. This uptrend is currently being retraced, and we would consider that following this retracement period, and we will have a further look at it on the daily, the trend could probably resume to the upside as the envelopes are still heading up. Now, looking at the daily, as we could see, we've been consolidating down since December. The consolidation has already reached its targets sometime down in April. It is currently back into them at the moment. We believe this consolidation could possibly linger on. You can see there's no stress on the envelopes. The envelope is still in the middle of the range, and the risk index is not showing any oversold condition yet. So we would see this consolidation continue at high levels, possibly for another month or so, marrying a slightly risk-off situation. Now, looking at the hourly, also still in a downtrend. It's pretty much reaching its target. It could actually move down, in worst cases, down to 108. We could see that we've had an intermediate bottom last week, and hence the rebound, but that the downtrend still seems to prevail at the moment. Now, looking at all three elements together, we could see a long-term bull, but a weak bull, which is neutral, a medium-term consolidation down, which doesn't seem quite over yet, but may have already pretty much reached its targets, and an hourly chart, so the short term, which still has some pressure down. So this consolidation as a summary, is still underway. Now, looking at the opposite side, so the gold prices is also seen as a defensive asset. You can see that it had been in the downtrend down to early 2016. It did react quite strongly early 2016 as it is a defensive asset, but it's also a reflationary asset, so a defensive asset with a reflation bias. So it had quite a strong reaction with other commodities during the first half of 2016, but then as rates started to move up, it actually retraced most of that move into the second half of 2016. Since December, reflation trades have been under pressure, and also interest rates, so that gold has been able to make a comeback, and we would call this a defensive comeback with the consolidation of the reflation trades. What we could see is that we have two higher lows, which is usually a good sign that our targets hadn't been really achieved, but in terms of time, we're slowly getting towards the end of it. And at the moment, we do need to still see this as a downtrend, so you do have a risk of a further move down. But that move up since December, and we'll see that on the daily, is promising for now. We could also see that in December, the risk index was oversold. Now, moving on to the daily, out of perspective over the next few months, it has constructed an uptrend. It is still underway. We can see that we've had a bit of a snapback over the last few days, but we will still hold on to this uptrend, which could, over the next few weeks, possibly towards the end of June, early July, lead us back above 1300 and possibly into the 1350s, lower 1400s. Now, we'd really need to accelerate above 1290 and 1300 to confirm this view. The risk index is slowly getting overbought. It's not quite there yet. It could still justify one last move up, but that's why we believe that the move is probably not going to be very long, possibly last another 3 weeks, a month, and we would really need it to see it accelerate over the next few days to justify these targets. Now, looking at the hourly, we can see that we've had a move up here, which reached its initial targets, slightly above 1290, pretty much into the target, and it has now been consolidating. It was also overbought on our risk index, and our envelopes were touching each other. We believe this is pretty much the levels of support, that we could expect, and we will now wait in sync with the daily for this hourly to slowly start moving back up again. Now, if we look at it in sync, we're in pretty much an exhausted downtrend, or at least a downtrend which is making a pause on the weekly. The daily, at the moment, is still heading up, and we believe it still has potential, although it is getting a bit overbought here, so we would want to see some confirmation of the upside quite quickly. And the hourly has seen a first leg up, is correcting down, and we would now expect it to resume its uptrend. Now, moving on finally to the markets, with the S&P mini futures. Mini futures on the weekly chart, so this long-term chart, has pretty much reached its target, hence the mention here, targets done. It's pretty much close to the overbought, yet it is still heading up, and we believe that this is an intermediate top situation that could lead into some consolidation over the next few weeks, months, but that in essence, although it is quite extended, the trend should continue possibly towards the end of the year. Now, on an intermediate basis, the daily chart is also overbought, as you can see here, and our envelopes touching each other, and it has already reached its target, so we would also expect here some consolidation into June, possibly into July, August. Now, finally, the hourly itself had reached its target, was pretty much close to overbought, and seems to be initiating a correction in line with the correction that we've seen on the big tech stocks over the last few days. So in general, a period of risk, we believe, lies ahead of us over the next few weeks on equity markets. Now, if we look at the summary, it is still 3 uptrends, the extended uptrends, but at the moment, it's hard to justify anything else than an intermediate correction, possibly on the hourly and on the daily. So we would keep our view that this is a risk-reward situation that is probably not very advantageous, that we could see some consolidation into the end of the month, possibly July, but that in general, equities, although expensive, remain in an uptrend towards the end of the year. And we wish you a very good week. Thank you very much. Bye-bye.